How lucky are you? You see what I mean? China, RBA. China. 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 Okay. So on and so forth. So you got some Asia this week, huh? It's too bad I'm not in Asia. It's supposed to be in, or still it might be. Today might be the day. Tomorrow might be the day. All right. So, okay. So anyways, let's go back into that. What else going in there? IVPMI, that's usually a pretty good scalp for the kitty cat. Okay. So this looks like a really good trading week. Lots going on. There's yen stuff. I don't see a problem. Swissy stuff, don't really see a problem. Okay. ADP, another great scalp on Wednesday, right? Okay. Yeah. I mean, Chinese CPI. I mean, think about what you care about when in regards to China. Chinese GDP, all right. Chinese inflation, all right. How about industrial production and capacity utilization? Yeah. Well, so look at, I mean, that's what they're here, right? PPI, CPI, there's your two inflation reports. The next day, industrial production, which will include capacity and utilization, right? I mean, it's all the right stuff, right? All the right junk in all the right places. Cool. So yeah, so then Thursday, obviously focused on ECB. Okay. Aussie home loans, investment lending for homes, Kiwi, electronic card, retail sales, whatever. Don't care about any of this, right? So it's just really nice. Euro, and again, more. I mean, think about it. Maybe you're thinking, I don't trade the Chinese currency. I don't trade yuan. Well, it's macroeconomics, right? It's macroeconomics for what, the second largest economy in the world. It's a big deal. So if the factories are being are starting up again, they're firing up all the old mothballed factories. You're like, well, why? There must be some demand somewhere. You get it? So that could be good for US dollar. That could be good for trading yen. That could be good for Australia, for example. So if you get some big numbers out of China, you would assume Aussie would benefit from that, right? And maybe for Kiwi, yeah, and maybe for oil, yeah. Except China has a lot of oil and a lot of coal and a lot of gold. I mean, China has a lot. The problem with China is, even though it has huge reserves of all these natural resources, they can't get them out of the ground fast enough. Max says they're worried about overproduction of steel. Well, they're not worried about it. They did it on purpose. So there's a difference. All right, and don't get all upset at the Chinese manipulate things. What used to happen if the economy was slowing down in the United States and the government needed to boost the numbers, it was at the pleasure of the President of the United States of America to call up, Saudi Arabia, talk to the king, and say, "Hey, king, buy some 747s." The king's like, "I got so many 747s, it's ridiculous. And in fact, I've already paid for 3 or 4 of them, and they still haven't arrived." "Yeah, well, buy 7 or 8 more." "Okay." So, Saudi king calls Seattle. "Hey, boy. Yeah, gotta buy some more 747s. And guess what? Boom! Jobs and money and durable good orders, and woohoo! The American economy is so good." And it was all nonsense, right? Uh, so same sort of thing for China. All of a sudden, if jobs are running few and far between, China just ramps up steel production. Make some steel, right? Hey, in America, we just build bridges to nowhere. Remember that in Alaska? There was a bridge to like literally nowhere. Hey, well, we built bridges. And we did that here in the United States during the Depression of the 1930s. We paid people just to build stuff. And it was probably the best thing that ever happened to America. Now people sit around just waiting for their free money. Give me my money. Save me, government. Save me. And I'm still waiting, government. How dare you make me wait for my free money? I am still waiting. Back in the 30s, you needed to eat. All right, tell you what. Get in a bus. We're going to drive you out into the middle of nowhere. And we're going to give you picks and axes and shovels. And we're going to build hiking paths. That's what we're going to do. You're like, what? Yeah, well, we'll pay you money. Good, I'm in. And we'll give you food. All right, I'm totally in. Right? Hard labor. Now you're not even allowed to do that to a prisoner, right? A murderer. It'd be unfair for the murderer. It'd be very uncomfortable for the murderer to have to, work hard. What a bunch of softies, huh? Right? You're like, what? He's a murderer. Push him off a cliff. No, it's going to cost $17 million to execute this guy, and it's going to take 27 years at $400,000 a year to house him. Like, no, just push him off a cliff. It's easy. Shoot, I'll do it for $10. But anyways, yeah, poor murderer. Yes, I'm being very politically incorrect. I'm very sorry if I've upset anybody. I'm very sorry if I upset anybody. I don't know. Maybe it's this coffee the minions made. And I admit I don't have emotions, so I'm not, I don't know. Yeah. Pinch of salt. I'll tell you what, though. I remember when I lived in California, there was something called Megan's Law because someone kidnapped a little girl and, raped and killed her or something like that. So there was a law saying, and it was because there was like a sexual predator that was released from prison, like living in an apartment next door to this girl, right? And so it turned out like people were like, well, you should tell us this. You can't put like a sexual predator right next to my daughter, right? So they call it Megan's Law. And so I'm like, when my wife and I decided, hey, we're ready to have kids, let's have kids. And I'm like, okay, good, oh, good concerned parent or potential parent should look this up, right? So there's a website run by the government, and you type it in, and it tells you where the closest sexual predators are. And I go in, and boom, it lights up the whole map. I'm like, oh my god, oh my god, everyone in my neighborhood is a rapist. Yeah, no, I am not joking. I'm not joking. Like literally, in 1 mile, there was like 600 convicted rapists and stuff. Yeah, and it's so bad. Like it's useless information now because it's some 17-year-old in 1978, right, had sex with this 17-year-old girlfriend, and and he's got this on his record. So now you don't know who the actual sexual predators are, right? But anyways, yes, and they have to, but it's scary, right? You're like, oh my god. Yeah, no more. Yeah, or at least no more naked barbecues with the neighbors, right, Ryan? All right, gonna insist on clothes. Insist. All right, and so yeah, so look, it's all pretty straightforward this week. The important stuff's important, and the non-important stuff's not that important, except for the Chinese data. So you're just trading Asia this week. That's all. Yeah. Well, I'll never make fried chicken naked again. Let me just tell you that. That was a bad idea. Actually, a brief funny story about that. One time, my wife is out of town. No, she was at a book club or something. This is when my kids were really, really tiny. They were like, I don't know, 1 and 2 or something, or 2 and 3. Anyway, so my wife finally gets out of the house, finally, after years of taking care of the kids, for a book club. And so I put the kids down to bed and everything's fine. But I'm running around, I'm doing things, and I'm cooking a steak, and I'm like, I don't even have time to get the barbecue going, but I'll cook a steak in my kitchen, but I like my steak cooked in a proper way, right? So, anyways, I get a cast iron skillet, and I put it on the stove and turn the flames up high, and just let it sit there for like a half an hour till the cast iron skillet is red hot, right? And I throw in a whole bunch of butter. It's just like smoking and sizzling and close to bursting into flame, right? And I put down the steak on it and just sears, yeah. But then I run and I go check something out, and I do this and I do that, and are the kids okay? And da 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 da. And I come back, and then I go to flip it over, and I'm watching it carefully to make sure I haven't burned anything, and I drop the steak, and that boiling liquid butter splashes into my eyes. What? So long story short, like 5 hours later, my wife's back and everything, and I'm laying in bed and I'm tossing, turning, and she's like, "What's wrong?" I'm like, "Oh well, And then tossed her. What's wrong? You're really unsettled. I'm like, I might have burned myself. She's like, with what? Boiling oil. So she turns the light on, right? Because I had gone to bed before she got home, and like my eye is like the size of a tennis ball, and it's like it's just weeping, like just all this water and tears are just coming out. And she's like, "Oh my god!" I'm like, "Yeah, yeah, it's definitely uncomfortable." I'm a little bit stoic, right? I'm a little uncomfortable. She said, "Why did you tell me? I could have come home and you could have like rushed to the hospital, called an ambulance." Like, I didn't want to ruin your book club, baby. Yeah, so I get to the hospital. I got second-degree burns underneath my eyelid. Permanently scarred. Yeah, like, yeah, so I threw boiling oil on my eyeballs. Can't complain about that. That'd just be selfish, right? So, by the way, that's what a Canadian is like. Like, yeah, I threw boiling oil onto my eyeball. Sure, I'm going to sit and wait, let my wife enjoy the book club. And when she gets home, I may not even mention it. In fact, I won't mention it. Like, why? Don't make a big deal over me. It'll heal. It's all good. Yeah, it's weeping and it hurts a bit. But it's just uncomfortable. Don't worry about that second-degree burn. All right, so good, good, good. Yeah, who you talking to over there? So okay, good. Let's just start with, what do you want to start with? Let's start with gold just for fun. All right, gold. Do you guys remember doing gold last week? Somebody, I don't know who, thought maybe it was going to come down to 1222. It's stupid, isn't it? Look at that. Isn't that stupid? Like the accuracy. You guys remember doing this? It's this exercise of, well, the one thing I know for sure is I can't buy it. Right? This was done on a Monday or a Tuesday. Like, well, we know for a fact we can't buy it, but if you sold it, it would fall to here. Right? So this is where you get upset, guys. If we can pick tops and bottoms with that amount of accuracy, look, it's not perfect, but I mean, come on, that's perfect. Then it must be tradable, right? Don't you think? Like, it should be possible. Then you just like, I gotta get this. I gotta fight for this. Look at this. Lower low, lower high. Look, off the pivot. Lower low, lower high. Look, off the central pivot. Lower low, lower high. Look, off the pivot. Lower low, hit the target. Oh, it's a pivot. All a random walk, of course. All just a coincidence. Or maybe not. Maybe it's not a coincidence. Maybe people actually said lower low, lower high, sell it off the pivot, lower low, lower high, sell it off the pivot, right? Lower low, lower high, sell it off the pivot. Pivot's the target. M3 to M1. Okay. Right? So going back to what we would have talked about before, if you're a bull, where do you buy? Don't tell me at market. Well, at support. Just simply, right? At support. There's no support up here. None. Do you see how straightforward that is? So even if it goes up here, you don't buy it because you'd be buying at resistance. Right? So the first support pivot's like way down here, right? Maybe the central, maybe the M2. But we know using technical analysis, right? Like, for example, that line we have there, that could act as support. So if you were a bull, okay, and you bought somewhere, let's say somewhere between the central pivot, the M2, and the roll reversal, if you bought in this area here, that's a good trade. No, it didn't work, but that is a solid trade plan by a disciplined trader. You were just wrong. but you had a lot of potential to be right, especially if you believe fundamentally or long-term technically this is going up further, right? And you've made these decisions, right? So if you bought here because you were bullish for whatever logical, intelligent reason that you could share with another human being, like, oh, let me give you 3 reasons why I'm bullish on gold. If you could do that, then that was the way, that was the price you were supposed to buy it at. 1240, 1250, whatever. Yeah, good trade. It failed. Good trade. It failed. Good trade. It failed. Well, so what? It failed. So what? It was a good trade. But if you bought it up here, you're just a fool, right? You just have no control of what's going on. And that's all we talked about Monday or Tuesday of last week when we created that trade plan. It's just, you just can't buy it. I mean, it's just factual. Unless you're foolish. You just have no idea what's going on, or you have no patience, no discipline, and you're willing to buy high hoping it goes higher. That's foolish. Certainly not a professional, right? So you either do nothing or you buy it down here. And that's a good trade, but it lost money. Great. Doesn't matter to me. That's a good trade, lost money. So what? Too bad. So sad. The market just didn't go your way. You were wrong on the direction, but you know what? You could be right this week. If you were bullish now on gold, do you understand this is your buy zone? And this week it might rally up. Okay? So last week you bought at support and it failed. Oh, too bad. Don't think you lost a lot of money. Now then here you're probably setting it up for another move. And you might lose money again this week if your bias is incorrect. And at some point, maybe you need to adjust your bias or not. Okay. Now, if we know for a fact you can't buy here, what can you do? You could not trade, or what? Yeah, or sell. What's your target if you sell? Not M2, no. M2's never in the history of mankind been a target. M1. M2 is an entry, not a target. It's never, ever, ever been an entry. So if you're a bear, this M3, right, M3, predicts M1. Isn't that just like sickening accurate? Don't believe me? Look at my book. How many years ago did I write that? I don't know, a million years ago. And it says if M3 is your top, M1's your bottom. It's just ridiculously accurate. Got it? So now, if you're still a bull and you lost last week, cry me a river, right? If you're a bull still, then you're doing this week. Okay? That's your plan. It may not work. Okay? So you can buy here, and because last week was so bearish, maybe you put a small trade here, half the lot size you normally trade. Okay? And you keep some dry powder in case it drops down to the other support. You see the other support here? This yellow zone, this red line that I may have drawn weeks ago. Check it out. It seems very close to the support pivot. Could we possibly call this support as well? Yeah. And remember, if you're a bull, your job is to identify the next 2 or 3 levels of support in which you might want to buy. And you might even want to buy it down in here around 1200. Right? Let's just do it like that. And you might have 3 trade plans this week. Okay? You might buy it here. Okay? You might buy it here. And you might just do the counter trend trade if we get there today or tomorrow, for example. Okay? What do bears do? A bear sells here and here. Okay. And do you see the confluence? Right? That whole sell zone seems to overlap this, doesn't it? Right? So you're going to sell gold around 1250 and you're targeting 1200. You're going for 50 bucks on gold for the week if you're a bear. You know the price, you'll consider it, and you know the target if you do it. It's always a fibbo. It's always going to be a fibbo. But yeah, why not? Throw that in there too, right? See, the Fibonacci is subjective, okay? And I would use it more in a trending market. And we're not quite trending yet because we're back inside the range, okay? But look at all these areas in the past on this other side here, on the other side of this trade. That's what I'm saying. This could be a great opportunity to buy. But really, in a scenario like that, we're on our way back here, right? Because we're really just range bound in that case. And we will be stuck in that range until I see a breakout. Okay? And that's why you actually, if we're down here, S1 to R1 is actually your target. Okay? But even that's doubtful because of our range. But you certainly, if you bought it here, you certainly would have to seriously consider taking profit here. Okay? So they're like, so in game theory, we study things, and it matters if the play of game is sequential or simultaneous. Because if it's simultaneous, you don't know the other person's choice. You make a choice, right? So in this case, you don't necessarily know if the bulls are going to buy it. Maybe you wait for smaller time frames and look for evidence, and you buy it. So let's say that is, let's say that's sequential. If price comes down and you see on a 5-minute chart people buying off the support, then you believe there are other buyers. So if there are other buyers, then you play a strategy. Okay? Sequential. And then you don't really know here, and that's going to be sort of a simultaneous move. Or maybe it's still sequential. If it goes up to here and other people sell it. Because then you have to break it out. All right, player one. How'd you bust this out? Buy, sell. Player two. Buy, sell. It's zero sum, right? So I don't know. That doesn't look like that'd be right. Anyways. Boop. All right, so you know what to do. If you're a bear, this is your sell zone. If you're a bull, this is your buy zone. You need to make decisions. Need a peso. So this peso, this vertical line is the first day of the month. And what is my long-term standing trade strategy with this pair at this time frame? What's the strategy? Well, it's not even sell pullbacks. In this case, it's look to sell, look to get short. Because sell to pullbacks means it's technical. This is not a technical setup, it's fundamental. Okay, so it's more like sell, jam your stop. Because the other thing I'll tell you is I don't know how long it'll last, but I'm looking for it to get short. And it could be short for a couple of days, a couple of weeks, a couple of months, don't really know. And if you haven't watched the video, then go to YouTube, type in how to trade MXN and why. I believe it's under Trader's Way account. Okay. Crude. Interesting, huh? You see this? What is this? A monthly trade plan. This came from the swing trading program. What's spooky is it says sell at $54.55. Okay. And this was Sunday for me that we pulled this together, and the market wasn't even open yet. Okay. But look the accuracy, guys. $54.58. $54. Did I get that right? $54.58. I'm trying to get sneak in the actual candle, but I don't think MT4 does a good job of this. But anyways, it looks pretty accurate to me. Okay. And the plan for the month of March is to hold short to get it down to 51 bucks. Conservative target. It's pretty interesting, isn't it? So, you know, on your weeklies, the price action is going to be a little bit different because it never goes straight down, right? So you want to see like basically down, up, and then down, right? Now, what if you believe oil's going to go up? What if you are a bull? What were you waiting for at the beginning of the month? You were waiting for a scenario that said, oh man, I hope this comes back down to M2 so I can buy it. Okay. So either way, you're happy. Right? Either way, you're happy. Either way, you should be happy. I don't know if you're happy. Okay. So bear's going down there. A bull is heading up here. Okay. You are not alone. So the swing trading program, we're practicing holding trades for weeks and certainly days. Okay, so there's the monthly trade plan scoped out. Okay, and now what? We're trying to find some congruency here. This is still the buy zone for bulls, and this is a buy zone for bulls. Okay, right? Seems a lot like the monthly plan, right? A bear would have already sold this here. Because we know, right? We know these things. If you're a bear, this is your sell zone. Cool. And this is your target. Okay. And as a bear, you're already thinking this, right? You already know it, right? And as a bull, last week, you hit the buy zone. So you're bullish, right? And so you're like, okay, so last week we bought. Remember, it's not just because of this green zone. It was because of the monthly pivot. Remember? Monthly pivot being support. But what is this green zone? That's the area where bears get out of the market, which puts them long on Friday, right? So on Monday, it drops into your support zone and you're gone, long and gone, because you believe all the bears have been squeezed out of the market. So where you go wrong, where most of you guys go wrong 99% of the time, is because you haven't made these decisions ahead of time. And I don't care if you're a bull or a bear. I care that you've made a decision based on analysis. And if you haven't done it, then you're confused all the time. You're like, I don't get it. I don't know if I should be buying or selling it. Well, are you a bull or a bear? Well, I don't know if I'm a bull or a bear. Well, then maybe that's what you need to focus on. Because once you've made a decision, it's easy. Like my wonderful story last week. It's like punching a small child in the face and taking their ice cream. Yes, Shah, I will do that today for you. Okay. Neat, right, guys? This is where you say, well, I need to get into making a decision. I need to make a decision. So we did gold and oil and peso, USD yen. Okay. So let's take a look at USD yen. What is this X? The X is where you have to take profit, right? Do you remember that conversation? You have to. It's required by law. Right? And swing traders from the swing trader course know that this is a projected counter trend trade into the weekly central pivot. Okay? Even if you're a bull, that's a counter trend trade. And you knew it Friday afternoon. Okay? Price had no business being up here. So if you're a bull, you're looking to do this. Okay? If you're a bear, you already sold it. Where were you Friday at market close? Oh, I was out drinking beer. All right, then you missed it. No pain, no gain. So maybe if I do the swing trading course again at the end of the year, you'll sign up for that and you'll know the counter trend. La di da di da di do 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 do. Let's do CAD. CAD Swissy, are you guys watching this one closely? Seems like that could be supportive. And then I would do it this way. I'd say this area is supportive. Okay. Really, you want to bring it down, right? I mean, it's more like that, right? So, can you sell here? No. See how easy this is? You can't sell there. No. See, this is where you get into like, you keep doing what you did before, right? And you're expecting the same response. But here, there's a little bit extra risk. So if you were selling here on this time frame, I would totally understand what you're doing, and you have a reasonable chance of making money. It's what I'm trying to teach you is it's higher risk. That's all. It's technically valid. Selling a retracement to a role reversal, fine. But if you're so hot to go and selling it, why didn't you sell it high at resistance? Why didn't you sell it here or here or here? Like, now you're aggressive? Like, what's wrong with you, right? Right? But you know people are selling it on the smaller time frames. And they're like, yeah, it's just a role reversal. Yeah, great. Great. Great, great, great. You're just out of position, in my opinion. Okay. It can fall, and it probably will fall down to 7500 or something like that. But it doesn't mean you need to participate even if you are a bear. Stop with this idea that you have to be in it when it's falling simply because you're a bear. You don't sell falling markets in that sense. You sell rallies in a downtrend. There's a bit of a difference. You're looking for mispricing. It's not that it's just falling in a falling market. It's like retraces up here and you're like, oh, I'm going to sell at the monthly central off of that 55 and I'm going to drop it, right? You're going to sell it at 76, maybe take it down to 75. That's a trade plan. It's way late, but whatever. It's kind of like a breakout retracement kind of idea, right? Great, whatever. It's certainly not at support. So even if you sell here and technically it makes sense and it falls and you make money, they're very, very risky pips. Artem, yeah, once again, I would suggest not listening to whoever or whatever program is talking about that. Okay, raising rates doesn't slow down the global demand. Okay. Okay. Now, what happens is the demand curve shifts and will change prices. So if prices are going up, it's because demand is going up or supply is falling, one or the two. Okay. So it's one of these things they'll tell you, and I hear this a lot, like the interest rates are going to go up, so the stock market's falling, right? How long has have interest rates been going up in the United States? Since the taper. When was the taper? I'd have to like open up a browser and stuff. I don't want to do that. No, no, no. It's way before 14. I think. Can somebody Google it? The taper tantrum? I thought it was more like 12, 13. Okay. I mean, did you Google it? I mean, you could throw out a whole bunch of numbers. I can. Okay. Okay. There you go. Okay. 2013. Okay. Interest rates have been going up since 2013. What was the Dow Jones Industrial Average, let's say September 2013. Somebody get me a Dow price. Dow Jones Industrial Average, September 2013. Bum 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 bum. You're Googling, right? 15,000. All right. We're at 21,000. What? So the Dow Jones has gone up 7,000 points while interest rates have gone from, you know, basically negative, right? And then up, 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 up. And we're at all-time highs, but we're raising interest rates. We're basically at 0. We're on our way to 1 and then to 2. And I mean, like, what? So what happened to all these idiots that tell you when the interest rates go up, the stock market falls? They read a textbook somewhere and they don't quite understand. So they're just repeating and babbling and making noise. Do you know when the stock market's going to fall? When interest rates can't go up any further. There's a difference, right? So stop listening to those people, whoever on the TV, and you listen to Uncle Wayne. You know what was scary back then? The yield on the 10-year was 3% back then. Crazy, huh? I heard Moses was a trader. Yeah, he traded goat though. Doesn't count. Yeah, that's why Dubai is finally. I remember meeting a guy. I'm like, yeah. So what do you do? And he's like, I'm a trader. I'm like, oh, I'm a trader too. He's like, well, what do you trade? I'm like, I'm a currency trader. How about you? Oh, I do like physical gold, physical oil, and goat meat. And I'm like, what? Yeah, goat meat. What? Yeah, yeah. It's normal in Dubai. Like goat. Oh, righty then. Yeah. He had a T-shirt that said "Got goat?" question mark. Is that right, Max? Yeah, it was a goat trader in Dubai. Okay. Well, actually, I know someone quite well here in Atlanta who's like a billionaire. At least he owns a company that does billions every year in sales, and it's chicken. This guy's a billionaire because of chicken. That's cool, Max. Right on. Selling into Middle East, yeah. Yeah, cool. Yeah, sweet. All right, so so this is like more than a technical analysis here. What we're doing is trader psychology. I'm like, you need to analyze risk. And I think there's a reasonable likelihood that the market moves up here or here. Okay? So selling now is a little late. What do I teach you? Well, I teach you to sell high. You know what pivot this is? Oh, is that the R1? Yeah, that's the R1. That's the resistance pivot. Uh-huh. M3, right? M3. There's the swing down. If you're going to take it, lower low, lower high kind of thing. I don't know. If you were a bull, you could have bought it here and that didn't work out for you, right? And if you were a bull, you never had an opportunity. So it's just like one of these things, like you need to analyze it and say, well, yes, it fell hard last week, but I'm not so sure. And you're like, you might buy it here, but if it comes down here, you'll definitely buy it. So you wait. But you're analyzing, more importantly, you're recognizing an increase in risk or the potential for a change in market conditions. If you can do that, you're a pro. If you can't do that, you're just like a baby in bathwater and you're slapping your arms and legs around and giggling. And it's fun playtime, right? And you find the bubbles entertaining, but you're just making a bunch of noise, but nobody can hear you actually. So maybe you're a baby under the water. Scary analogy. I'm sorry. So yeah. So take control, right? Take control. This is where you take control. You're analyzing the market and saying, do I have my price that I'm willing to pay for this? I'm a buyer. Am I at support? Do I like that price? Am I willing to buy it at that price under these market conditions? Okay? You're the one in control. You're the professional. You're the one with answers. You don't know if you'll get your price, but you know what your price is and why. Big difference than an amateur, right? So let's pull the plug because, you know, I'll be here tomorrow. Don't forget about your Asia. I will post this video to forex.today. Peace on earth. May the pips be with you. May your profits be above average. Thank you for your loyalty and thank you for being a client of Traders Way. We appreciate you. It's a great honor to earn your respect, even if I have to earn it over and 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 over again. I look forward to our time together. So, see you tomorrow. Cool. Take care, guys.